a bit of a global color to the show. Mr. Manish Singh, Chief Investment Officer at Crossbridge Capital, joins us on the line from London to try and give us his perspective of what's happening. And Manish, seems like for a lot of people, Europe is now a serious game in town. So for somebody like you who's investing across geographies, what's the current global landscape looking like? Is it Europe or is India featuring in the list too?
So, hi, good morning, Neeraj. I would say that Europe looks attractive only for the reason that the valuations are cheaper. There seems to be a change in policy in Germany, at least, in terms of the way they want to spend the money, or rather, let's say they want to spend more money and take on more debt. For those reasons. But there are structural problems that still remains in Europe, and that is about regulation and labor laws and government spending as a percent of GDP being one of the highest in France, 57%. And you compare that to US, that's 37%. So there's still a lot of questions that Europe has to answer. However, in the short term, given some of the policy changes, it looks attractive. But if you go back to the structural story, US is attractive and India will continue to be attractive for the reasons that we have better GDP growth in India, and US has a much better way of managing its economy. And I quoted one figure as government spending as percent of GDP. It's one of the lowest in the developed world. So those markets are not going to fall out of favor for a medium to long-term investor. But for short-term investors who have a very different mindset, for them, they might be jumping on the European train of defense spending and see how far they can go. But to me, that story still has questions to answer. And maybe this week in German parliament, they're going to pass the rule to take on more debt. But then that's just one piece. They have to then follow up and then spend that money and see earnings grow for people to get excited about the whole economy.
Right. Manish, Mahima also joining in. I just wanted to understand that, considering the FOMC decision which is due on Wednesday, how are you reading that and how do you think, how important is it for global markets as well as how do you think the markets will react to that?
I would say that I don't think anybody is expecting a rate cut this FOMC meeting. So if there isn't a rate cut, and most likely there won't be, then it will not surprise anyone. If you look at the CPI print that came out for last month and which came out a week ago, that CPI print was in line or weak. But if you look at the CPI print forecast for next month, i.e. the March print that comes out in April, that looks flat or almost zero from the forecast that I'm seeing. So if you take that into account, then you know that inflation is not a big story, and that is very encouraging. What is happening, and as we all know very well, is that President Trump's tariff, the stop and start nature of it, or the remaining aspect of there being a reciprocal tariff on April the 2nd, is what is holding people back or holding investors back. So you've seen a 10% move in S&P, but people are not going to invest, not going to buy back into it unless you see more clarity in what the tariffs are going to be. Once the tariffs are set, then I think you will see people going back in because tariff exists globally. I mean, India puts tariff on U.S. imports. China puts tariff, and Switzerland puts tariff, and Canada puts tariff, and the world continues. So what people don't like is the uncertainty of what it's going to be, and once that becomes certain thing, then people are going to move on. And I will say one final thing. I've said this before as well. The net result of this trade war is going to be positive for everyone, because you are going to see tariffs come down everywhere as part of a deal. And you have seen this in India saying that they're going to take tariff off some of the U.S. exports. Same thing is going to happen everywhere. And that definitely is a good news for every investor.
All right. Well, Manish, thank you so much, for giving us those insights. And thank you so much for taking our time and speaking with us at NDTV Profit.